And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. Coach Tim Justice here and welcoming everybody out today. A lot we're going to talk about today. Powell and Mnuchin are testifying via Zoom to the Senate here today about the economy and future relief and things that are happening. There's quite a few people on Wall Street saying that this market rally is not necessarily something to believe in, but I want to talk about the difference between the pro opinion or maybe that Wall Street opinion and mainstream opinion and algos with the team. We have earnings out of some of the big retailers, Walmart, Home Depot, Kohl's, and others, and building permits, some stuff on housing that we're going to get to as well. But maybe most importantly, just the market at resistance. And we're going to break it down technically. Several things. Number one, if you're watching our show for the first time, welcome. We love our channel. We love doing the show each and every day. Click the subscribe, click the bell. Come back and join us every day. And if you don't know who Tackle Trading is, there's a pro member trial in the comments below. You can always sign up for a trial. Come and join us on what we do over there on the website and in our community. Got Matt, got Mark, got Cody. Matt, how you doing today?
Tim, I'm doing good. I'm excited to be here. I was thinking it was a slow news day, and then we started talking about the differences between Main Street and Wall Street right now. And you're seeing a very, very strong disconnect between what the momentum traders of Main Street are doing right now versus what Wall Street does. And that's kind of where I want to start today, because I read a couple different studies today that one was from the Bank of America that said 68% of respondents believe that in the next 3 months that the market will either be lower or significantly lower than it is today. There was also a survey out of Deutsche Bank, and you guys all know my opinion of Deutsche Bank, but like 50, I think it was 58 or 59 respondents said there's a disconnect between the fundamental reality and the actual market recovery. Most of them saw this market recovery that we've seen over the last couple months as more just a bear rally coming into resistance. But then on Twitter yesterday, and all over Twitterverse, the financial Twitterverse, stocks are never going to go down again. Stocks are never going to go down again. CNBC, buy everything, buy everything. And it's just, there is a fundamental disconnect between how Main Street America sees this stock market right now and how Wall Street sees this stock market right now. And I've long held the opinion that you got to trade price action. And if you have momentum in the chart, you always trade the momentum. But from an investing perspective, valuations, consumer behaviors, economics, they all matter.
Mm-hmm. Yeah. Well, we expect they will at some point. In the short term, they have not. The whole market feels like a momentum trade on steroids. Mark, what do you?
But again, I disagree with that. I disagree that the whole market feels that way. It's only led by a certain portion of the marketplace. The majority of the market, the vast majority of the market, has not participated in the same capacity as the communication sector or the healthcare sector or the technology sector. Most of the sectors have underperformed in this market rally. So I get that we talk about momentum and we talk about how it's euphoric out there right now, but I'm not seeing that in the S&P 500 right now. I'm not seeing that in the Dow Jones. I'm not seeing that in the NASDAQ. When you're looking at this from just a pure technical perspective, we really haven't done much in the S&P for the last month. We're really kind of just going through some type of stagnation from a neutral capacity, and you're really seeing a triple top form right there at about 2950. And then obviously you got the 200-day SMA right there at 3000, and you have a falling, I believe it's the falling 50-day moving average at that level as well. And so you're starting to see this little this stagnation of neutrality. Now, if you break out of 3000, that's obviously a momentum signal, no doubt about that. But you got to see that first. But, it's kind of, and maybe I just have a disconnect with some of the Main Street, but it kind of seems like all this momentum is coming into the market. I'm not seeing that in the S&P 500 chart.
Mm-hmm. Mark, what about you with this growing sentiment between Wall Street and the pros and all that kind of stuff? You've said it many times. All the smart people in the room have the bearish arguments right now, but the bullish arguments are simpler. And I think that the algos in Main Street and the perception around it is obviously on that side of it. We don't know who's going to win out, by the way, but Mark, what's your perception on this? Is this divide growing? Is it even getting bigger?
Absolutely. It is getting more ferocious. Like, one of the things I do to try to gauge sentiment is read message boards. Seeking Alpha, other financial message boards. And the bulls
And
are
that's
for,
Main Street. Those message boards are
yes,
Main Street, right?
yes, absolutely. And make no mistake, there are a lot of Main Street bears too, but the overwhelming amount, the bull argument is really simple. Trust the Fed, look forward to 2022, the amount of stimulus in the market and the Fed having your back. It is a really simple to understand. I'm not saying it's correct, but it's simple. And this is one of the things, is that the bulls have this very consistent argument. Earnings don't matter today. Economic reports don't matter today. Everything will be good in 2022. Where do you want to put your money? Fed has your back. Really simple argument. All right. The bears have like 47 great arguments, but they're not concise. People will point to one thing or another. Some will point to consumer spending. Some will point to a commercial real estate collapse. Some will point to deteriorating spending out of the fiscal government of Republicans. Others will point to fundamentals. I mean, there's a million different great arguments. The bulls have one. And so, and one of the problems, and I've talked about this on weekend reports lately with our pro members, all of the bear arguments are one day. One day. There might be a second wave. There might be a trade war with China. There might be commercial real estate collapse. There might be a change in consumer behavior. That is a one-day argument, and it's hard to refute. Bulls, all they have to do is say no.
I know, but haven't the bulls been, pushing the goalpost a little bit here? I mean, a month ago, we were talking about how we were going to get a V-shaped recovery in the economy, and, everybody's going to come back to work by the end of 2020, and we're going to see GDP growth by the end of 2020. And yeah, we're going to have a bad first and second quarter, but the third quarter and the fourth quarter, we're going to start to see growth both in GDP and earnings. And we're starting to see that go. And then 2 weeks ago, it started shifting to, we'll see that by sometime in 2021. And now we're talking about earnings growth in 2022. That's 2 years. You got to wait for a lot of variables to actually play out. And specifically of the Fed, I've seen Jerome Powell in his commentary, in his speeches, in his interviews, and even today in his testimony on the Hill, he's changing his tune a little bit. To the point where, yes, he still maintains that same comment he always makes. We have a full range of tools to support the economy. That's his favorite sentence, he says. But now what he's doing is starting to say, well, it's not our job to fix everything in the economy, and the U.S. Congress.
That's a great point.
And the U.S. Congress needs to step up, and the U.S. Congress are fighting over that next stimulus package from a Democrat versus Republican, and that's what I saw in the debate today. So,
yeah, I was going to add that it wasn't as much the testimony. I think it was meant to be a testimony, but it was Democrats and Republicans screaming at each other, pandering one way or the other, and Powell sitting back saying, "That's not really up to me."
But isn't that sign bad for the markets, though?
Well, and here's the thing on Powell. Powell last Wednesday started to really hone in on this point that Matt was making. He was, and it's very, something scares Powell about the underlying fundamental economics. If you read the Fed report that was released after the Friday, if you hear Powell's rhetoric, if you just view his body language, he is really concerned about the structural problems in the economy. And he has been adamant to say, debt is a serious issue, not one we should worry about today. You need to spend money. There are structural problems in the economy. The Fed has been on point the last week with that. There is something they see that really, really concerns them. Mm-hmm. They've specifically pointed to commercial real estate in their Friday report.
They did.
And they're like, if you don't spend money, this thing could get really, really ugly. Because when you think about the Fed, they're loaning some money to businesses. They're buying bonds, but the structural problems of the economy, there's very little they can do. They can create perception, which they've done masterfully in bulls. The Fed's got our back. I would like to ask bulls what that even means, right? I bet you 99 out of 100 bulls couldn't even answer that question, that the Fed has your back. Well, how? What does that mean? Low interest
I'll
rates?
tell you what it means. It means they believe that if the market crashes again, the Fed will buy the stocks directly.
And there you go.
That's what they believe. I mean,
Okay.
and by the way, I believe that.
And a hypothetical, and we haven't seen it yet.
But they keep hinting to the bazooka, right? I mean, what is the bazooka if
They
it's
also talked about today that they're not going to be buying state bonds. And how are states going to generate revenue? Because states are upside down right now. There's a lot of states that are going to have to cut budgets here. And you have a lot of states like Illinois and Michigan that have pension problems right now. So, I mean, there's other structural problems in the economy from a statewide issue. And when the Fed does monetary policy, guys, it doesn't aid the economy. It stabilizes the financial sector and stabilizes the stock market. Fiscal policy is what aids the economy, and that's what Powell's getting at.
Well, on that note, do you guys think they're going to get a fiscal deal done, version 4? Matt, you said yesterday you do believe they would on our podcast. I'm seeing a lot of rhetoric on both sides, though. They are not getting along right now. I can just say that.
Well, I mean, Republicans want to see how the phase 1, phase 2, and phase 3, which was significant, how it plays out. In the PPP programs, Mnuchin was talking about today how they've only funded half of the PPP program so far. So they want to see how that plays out. Democrats are past the $3 trillion fiscal stimulus. Obviously, it's got to go through a Republican-controlled Senate. So I think they're drawing battle lines right now. I do believe we will see a fiscal stimulus program come out. What will that look like at the timing of it? Is it a month from now, 2 months from now, 3 months from now, when the economic data doesn't improve? Nobody knows that, but I do believe we will see another fiscal stimulus program coming out of the government.
Mm-hmm. The current one takes us through what, like July? I mean, that's pretty much the expectation. The PPP loans were about, I think, 75 days to cover payroll, and the unemployment insurance was extended through July. You still have Fed money. So I don't know if there's a need to push some new bill out there right now, but it seems like there's growing discord between between the House and the Senate, between these two parties, which even after, all that they've been through the last few years is even an astonishing statement if you think about it. They're even getting further apart.
Democrats and Republicans don't see eye to eye.
Even worse than last year and the year before, quite frankly, even worse than in a lot of different conditions I've seen. Mark, do you think they're going to pass something here? I mean, could this derail the bull argument?
We've been talking with our pro members for a month that the Republicans have signaled they don't desire to spend that $600 people are getting in addition on unemployment. I don't know if that goes away completely, but it's not going to be $600. That is a 100% guarantee. They've signaled that they don't want to spend money as a general rule. They've been telegraphing this for weeks. Mnuchin, Kudlow, the key players, the key mouthpieces to let you know where the administration stands or where the Republican Party as a whole stands. They've been using phrases of, well, let's see how this plays out. We don't. I mean, they've been very 100% clear on this.
And there's an argument there that can be made that as we reopen the economy, how quickly does the economy recover? Maybe you want to buy some time to see if corporations and small businesses. I think small businesses are going to really struggle in this environment. But do they bring back their employees, and do their employees come back as long as they're getting unemployment benefits on top of what the normal is? So they probably want to see some data, and I don't think that's necessarily a bad thing.
Mm-hmm. No, I understand that logic as well. I mean, and it does make sense. Let's wait to see what happens with this money we're just pushing out there. I do understand some logic behind that. The whole thing feels like
and it does seem like Jerome Powell is putting the responsibility on the Congress to step up. And he was very clear today when he said, quote, it is not our job to fix every problem in the economy. Their job is monetary policy, the stabilization of the financial sector and the liquidity in our banks, and to determine interest rate policy to the point where inflation doesn't get out of control. And I think one of the Fed's biggest concerns, and I talked about it on the podcast yesterday, is if they stimulate directly into the economy, that's going to create velocity of money, and you might see inflation spark at that point. So what they do with money, they just do it from a liquidity perspective and an interest rate perspective that doesn't go to the economy. It doesn't go to Main Street America. And that's what Powell was talking about today when he said, it's not our job to fix every problem in the economy, and the U.S. Congress needs to step up and do their job. Now, he didn't didn't say that directly. He was much more cordial about it. But that's my take on it from what I heard from Powell today.
Mm-hmm, mm-hmm. You know, Matt, what's interesting about this chart that we're staring at, obviously we're talking about all these different arguments that might propel it one way or the other. We're at a very key battle for bulls and bears, you know, because we're right at that resistance level you talked about. Kind of walk me through the intraday if you can. Tell me what you're seeing in the chart.
Intraday is really kind of fascinating right here. You tried to break out earlier last night, right when the ECB was opening up, the European markets were opening up, and then that just kind of faded throughout the rest of the night. Ever since the cash opened, what you've seen, and I'll kind of you see this resistance right there at about 29.50. And when you're looking at this from a 15-minute chart perspective, you see this double top start to form between 29.50 and 29.55, and you got multiple levels of intraday support right there at 29.35. And even if you do break out on top of that, you do have a little bit of a resistance here, and you have obviously the resistance with the moving averages there as well. But it really is forming a fascinating chart over the last 2-3 days. Just kind of seeing this, the last 24 hours actually, just seeing it kind of stagnate after we had that, and that's not abnormal when you see a 3% up day in the market to kind of see a stagnation and wait and see how it handles resistance.
Mm-hmm. You know, for me personally, it's not a breakout till it clears the 200 moving average in 3,000, and that's just kind of where my head's at mentally. I think psychologically, those are some significant levels. That 200, where isn't that right? Like right on the dot at 3,000?
Yeah, it's right there, like 29.95, 3,000 area. And again, when you're looking at this from a weekly perspective, that is right where that falling 20-day moving average is. That's also right where the 50-day moving average is from a weekly period. And Mark has some very significant evidence on these weekly moving averages of how they act as resistance. So you're going to need something positive, and whether that's just political rhetoric or
catalyst
updates or whatever it is, it could be a few different things. You're going to need something fairly significant to really kind of rally the S&P. Now, that's not the same when you're looking at some of these other indexes like the NASDAQ. I mean, the NASDAQ, this is where the momentum is really. It's in the NASDAQ. And you just have this very consistent trend, just kissing off the 20 in between that bull zone, between the rising 9 and the rising 20, testing another breakout here today. And then when you look at it from a Dow Jones and a Russell 2000, they have just underperformed the market, really kind of just setting in stagnation there. But what really kind of is telling here, and why I don't believe that the momentum has been through the entire market, Tim, is when you kind of look at the sectors here. Basic materials kind of looking like the S&P 500 here. Energy has significantly underplayed the market, although I do think a breakout of 40 would be tradable and could see some momentum above 40 in energy. Financials has significantly underperformed the market. Industrials significantly underperformed the market. Consumer staples showing a little bit of a bear flag here. Real estate significantly underperforming the market. Utilities underperforming the market as well. When you're looking at the leaders of this market, you're really talking about communications right now starting to step up. And once you got above that 200-day moving average, came back and retested that zone of support, you saw some momentum coming into here, and then you broke out of 52. Communications is a sector I would look at from a momentum perspective. Obviously, technology is what is, with the NASDAQ, been the number one sector by far in the market over the course of during this recovery. You also have healthcare here that's performed fairly significant, led by a lot of those pharmaceutical plays over the course of the last couple months. So you really only have 3 or 4 sectors that is showing strength in front of the market. And so this is really kind of a stock pickers market. It's a momentum market in some sectors, and in other sectors, it's kind of a stay away right now.
I'm going to ask you both a question right here, and I think it's really, kind of where my head's at. If resistance hold and the bears come in and the market does sell, what area or sector of the market would you target the most to the downside? Who's going to get hit the hardest, Mark?
Well, I mean,
let's say the bears end up winning.
I mean, this is the real battle of the market, right? Because tech, which represents a higher and higher percentage of the S&P, is the strongest sector. I mean, this is one of the disconnects of the whole market as a whole. So the sector with the most room down is also the sector with the overwhelming sentiment, overwhelming momentum, and your beat up sectors, well, they've been beat up pretty good already, right? So, I mean, it's a really hard, I mean, you know, depending on the nature of the sell-off, it could be everything. It feels like an index play if you wanted to play against it more than anything, because trying to guess, because you're like, oh, well, I'm going to go short all the stuff that's been beat up already. Well, we've seen how high that those things can rally on news. I mean, those beat up companies were up. I mean, Six Flags was up like 18% yesterday.
I don't think industrials have not, they have room down. To me, industrials is an area I would disagree with.
Financial too.
I think even financials and banks still do.
Industrial and financial, even though they've been depressed sectors of the market, it's hard to, I get the bull thesis, but it's hard to find an area of that market where you're like, that's a good buying opportunity right now. So if you see a leg down in this market, the entire market will sell off if you see another leg down. But if we just see a 5% pullback, we'll say, I still think you're buying tech, and I still think you're buying communications, and I still think you're buying, some of those areas of the market that have been, momentum based. I wouldn't be looking to buy in any of those depressed sectors. I can tell you that.
By the way, if you really want to understand the point of the split market, just go to a heat map and click 1 day, 1 week, 1 month, year to date. It's the same picture through the entire thing, Matt. It's really fascinating that everything is just split red and green. It's a Christmas tree right now. There's no doubt about it, red and green. Big picture analysis, obviously. I mean, we're going to get more clarity as we get more information from people. But yeah, here's that heat map. There. Yeah, it's that picture, split picture. Let's move through the broad markets here as we go. Let's start with crude oil. This was the day I've been waiting for, and man, what a dud. Nothing, Mark. Not a thing. And absolutely just not much going on here. The futures expire today for June. We're not seeing much there, Matt. Click that trade tab. Mark, there's no disruption here. What's going on with oil?
Well, I mean, the bullish chatter, I mean, it gives evidence that what had happened a month ago was as much as a technical, fear-based, algorithmic drive down as it was a real issue in storage. That's what it says to me, is that it looks like the storage issue is still an issue. Don't get me wrong. There's evidence that it's starting to wane a little bit, but really, I think what's happened is you've had a shift in sentiment. People are bullish on oil right now, relatively, right? One of the oil sewing circle made a funny comment. He's like, when did $30 become the new bullish level? That's still not a level that companies can make money at, especially U.S. Shell. So, I mean, but that's what it is, right?
The answer is when the June contract or the May contract went negative $40. $30 was a lot more stable than negative 40 that one day it happened, but
I mean, the amount of rigs that have been cut in the U.S. has been astonishing over the last 6-7 weeks.
Significant.
We are at levels the production has been obliterated. And that has made everybody a little more like, all right, so we have a little calm.
You've also had, not only have you had production cuts, but you've had demand pick up as well.
Let's see. No, I mean, it's just, once again, it comes to the whole thing. How do you want to play oil? It doesn't mean that oil can't go down, but this is the beauty that I love and why I love commodities so much. In the financial space, we have bulls on one side saying fundamentals don't matter, and we have on the other side saying fundamentals will matter, and they make all their arguments. Fundamentals always matter in commodities. You don't have this disconnect of reality, and it's one of those reasons why I invest based on fundamentals, because fundamentals always matter in commodities. Yeah, they can have their freak out moments when you have margin calls across the board forcing everything down, right? So those moments in the short term, but I mean, you look at gold, had its when the margin call was hitting the whole market in March, everything was selling. But look how quickly price reverted to the mean with gold, because in commodities, fundamentals they matter, which is why I love commodities so much, which is why I'm confident in finding ways to play oil, because fundamentals matter, and the fundamentals have not been better on oil. I can't even think the time when true fundamentals have been better from a stabilization standpoint. This doesn't mean oil's going to skyrocket, but from a stabilization, which is the argument I've been making for 2 months.
Mm-hmm. Matt, when would you be interested in a new entry on that chart right there? Because I know we had that little technical breakout, but
yeah, I mean, last week we were talking about this potential breakout of 26 and a half with the price target up there around $30. You kind of dinged into that $30 on Friday. Then you saw the continuation of the bullish thesis kind of break out of that $30. It's a little overextended right now for my blood, to be honest. I'd like to see some consolidation, maybe a retest of $30 a couple times. But I mean, oil is extremely bullish right now in the short term. And yes, oil can, go up and down fairly aggressively. But as long as you stay above those moving averages, and again, I'm not going to chase it with an RSI literally at what's the current RSI at? It's about 88 right now. So, you're extremely overextended in the short term. I would like to see some consolidation, maybe a couple day retest of 30 to really establish that as a support zone for those traders, the algorithms, and so on and so forth. But yeah, I mean, once it broke out at 20, and then when it broke out at 26, those were both really good buying opportunities in the short term. From an investment perspective, it's a different form of analysis, but I personally would like to see a little bit of consolidation and a few days retesting of that $30 before I see it, before I look to be a buyer again.
Mm-hmm. Natural gas, real quick. We're talking about this in the scouting report meeting on Friday and through the halftime report last week. Support was significant, and for at least 2 days now, we've come up off the bottom here. Interesting chart. Mark, you've been approaching this UNG with lower levels, and it's something that you're looking to cash flow on. What's your read on nat gas here?
Well, I mean, actually, me, I'm like a traditional fire that naked put at the bottom, but like one of the members was like, hey, I have a naked put expiring on UNG at 11:50 next week. How should I manage that? And I was like, well, I don't know how you're going to manage it, but I'm going to sell a naked put at 11:50, which was actually in the money. You know me, sell a naked put at these really low levels because, I want to take ownership at those levels. For me, in my analysis, I was like, I'm willing to take ownership right here. And so I sold an in the money naked put on natural gas on Friday because, once again, fundamentals matter in commodities. And I see fundamentals decent moving forward in natural gas. Plus, you're at a support level. Well, sign me. I mean, that's when I get fairly aggressive by my standards, right? And so, I mean, I put my money where my mouth was, got a nice $70 credit on that in the money naked put. And natural gas has climbed. I'm a big believer. When you have a fundamental argument where you can make it, I don't care what it is, Walmart or Home Depot or a bank or a cruise line or natural gas. And so if you can make a fundamental argument and you're at technical support that's been tested, man, sign me up for that 99 out of 100 times.
Mm-hmm. UNG is a really good cash flow product.
It is a really good cash flow product. I mean, there was a year straight where it wasn't. I mean, it was just nasty bearish. But I mean, UNG and USO don't exactly correlate to the actual commodity. But when you're looking at natural gas, it really is neutral right now. And if you're going to sell naked put on it, you need to have the willingness to take possession of the actual instrument. And then what you do on natural gas is you write a nice little 40 delta contract and bring in some more cash flow. And if it gets taken from you, you write another naked put and you boomerang trade that, constantly on natural gas. And I do think natural gas at this point is back to being a boomerang style cash flow product.
Yeah, no, I do like it as well. I've been looking for ways to get in. Those naked puts out of the money or even at the money there, Mark. That 1150 strike is more aggressive than what you normally would do there on a Friday, but it tells me that you do are willing to take that delivery, which is the important part.
Which is the critical thing. And this is the amazing thing about having a community. is that like when we meet as, I mean, because, you know, yes, we're coaches, mentors, whatever you want to call us, instructors, been around the market, share our insight, share our wisdom. But man, tackle trading has a ton of really, really smart, adept individuals and part of the community. I mean, there are just
and also educated investors.
Yeah, no.
Educated
and so like, you know, David Dean was like, I thank you, David, once again for making me $70 on something I might not have seen. Jonathan, you know, when we were looking at things, a member of this community over the weekend, Jonathan was like, I see this really great setup on CRM. We analyzed it from a technical standpoint. Thank you, Jonathan. I love the members because they make me money. And hopefully we do that for them as well with our advice. At no point do we say, do this at this level, but we talk about things. We talk through things. We look at the technicals together. We look at the fundamentals together. And then people will make their own independent decisions. And I love that dynamic.
We also have honest conversations, and we don't spin. Not one coach at Tackle Trading will spin. Not one coach is going to promote a stock just simply because they're in it, like we see in CNBC all the time.
And there are occasional disagreements, right? You know, like on USOs, the example we'll cite for a long time where y'all were against it and I was right. You know, that's the thing that will continue.
You can't declare victory on that yet.
I love how you just snuck that in there. You gotta go to your next. You gotta go to your next subject a little quicker. You paused too much after I'm right.
This trend does not look anything like what is happening in crude oil. First of all, your take and my take on oil has been fairly consistent. Once oil broke out of 20, I was calling it bullish the same way you were. The disagreement is how to play that breakout if you're not just playing the actual futures contract.
It's amazing to me as well. I'll take this one personal, Marky, that the biggest bear on oil from 50 all the way to 10 somehow is now wrong on oil. It's very Trumpian there, Mark. Everything is always right on your side based on your perspective.
I've said this many times.
It's not on my perspective. It's on the actionable items I suggest.
He is very consistent. He will declare victory and just call it a day.
Well, that's a nice thing. That's a nice thing about gambling enterprises, whether it's poker or sports or the stock market. What I love about it is at the end of the day, there is a decider. Did you make money on the trade or didn't you?
That's a fair point.
I mean, Mark has certainly been right in his analysis on oil and the stabilization of oil over the course of the last month. And Tim, you and I were both extremely bearish once oil broke down out of $50, right? I mean, I remember back in early January talking about how this fake out we had in early January was ridiculous. Everybody can be right depending on your time frame.
Well, and I wonder if that's what's going to happen here with the whole market with the bulls and the bears. The bulls are winning in the short term, but those fundamental bear arguments are pretty strong. Let's keep working through the markets here, guys. Gold, not much there today, Matt. I mean, a little green candle, but still in the range. Silver, though, really interesting chart, in my opinion, much more, in terms of making a decision or whatnot. Silver's made a huge rally the last week or two. That breakout was real. As you get up into this 18, 19 level here, guys, I mean, do you have to consider, if you were just a trader, taking profit up here?
Oh yeah, I mean,
if you're a trader, yes.
Out there, yes. I mean, you're coming into multiple different levels of resistance. Maybe you do have some strength coming into silver, and it's really at the high of the day right there at $18, and $18 is a resistance level for silver. When you look at it from an intraday perspective over the last 2 days, you saw that ting right there at $17.95, and then as silver started really kind of price appreciating right when the futures market was coming into focus, and then obviously the cash open, you had this really kind of nice drive on silver from 1740 up to 1790, and then it simply consolidated. So, I mean, if you're day trading silver, and not a lot of people do day trade silver, but you could see a setup above $18 here to momentum trade it. If you have been swing trading silver in this nice little run it's had in the last 4 days, especially reclaiming that 50-day moving average, I don't know if I'd be locking in profit completely, but I'd definitely be adjusting a stop loss under intraday support levels.
Mm-hmm. Or even, maybe even selling a call against an SLV position or something like that. There are actionable ideas.
Yeah, but SLV is not like UNG and it's not like USO. It's hard to get the premium on silver in that capacity.
You know, the best I've been able to do is like I've looked, because I've sold about 4 or 5 naked puts on SLV, is like when you have those down days that it picks up the premium a little bit. And once again, I'm willing to own up to like 1,500 shares of SLV. Once again, if I get a bargain, I'm not going to chase price. It's hard to get premium right now after the rocket ship is left. You know, it's why it's important if you're going to trade it, trade that breakout that occurred 3 or 4 trading sessions ago. It's just hard. I mean, you have to go out, and most of the time, Tim, I target like 60 days out or 50 days out on SLV. So if you go to those July contracts, like to get levels that you've even like $20 for the 14, you know, something like that. If you were looking to start and build a position, I've been like, my stance for the last 6 weeks is relative to your average stock, because silver has some downside if the whole economy crashes, right? But silver has a precious metal kicker in this environment that your stocks don't have. The Fed has silver's back too, when you think about it. And so I like silver at lower levels. It's just a matter of trying to suck out that premium.
The Fed has their back though is gold.
Oh, and we all know our position on gold.
But yeah, I just, over the last few years, I mean, silver used to be, SLV here is the ETF that tracks silver, obviously. Silver used to be a fairly decent cash flow instrument where you could do naked puts, you can do covered calls. But I mean, if you're looking to get an average of a 2% covered call premium, you're just, that's hard to find in silver. And I mean, even with volatility right now at 42, which typically means you can get a premium somewhere between 3 and 3.5%. You're still not even getting 2% here. So, you know, on a naked put, I mean, it's just, I mean, you're getting lunch money per contract is what you're getting. So the USO and UNG are better cash flow instruments. They're better naked puts to boomerangs to cover calls. I think silver is more of a directional tradable instrument, in my opinion.
You know, the dollar's stuck in a range, not much there. I have no idea what's going to propel it one way or the other. It just feels like, Matt, just completely consolidating now for almost a month and a half. Just nothing, back and forth, back and forth. It's got the whole currency market stuck there. Bitcoin pressing 10K. There's not much in that chart until we either break or else it does not hold. Although it's been resilient here, guys.
Kind of like that consolidation over the last 4 days as you've been hitting on that 10,000, that very, very significant whole number. And as you can see, and this is what I talk about with the RSI, when you get so far overextended from a relative strength perspective, it's just really difficult to chase that dragon. You kind of got to wait for it to consolidate. And, you know, Bitcoin came down on that on the one day that they had their, what was it? The split, what was that called again?
It was the halving.
The halving, that's right.
Yep.
It's a split to me, but the halving. So it had its 1 day drop, but really kind of kissed off that 200-day moving average. But this is what you want to see. You want to see consolidation here. You want to see that RSI drop. And then as it then breaks out again, you see that RSI have another, it has room to run. And that is step system 101, whether you're trading a stock and whether you're trading an index, a commodity, Bitcoin, currency, you want to see this stock have room to run. And there's 2 ways you can look at this stock having stocks or commodities or Bitcoin or whatever that you're looking at, room to run. You look to the left of the chart first. And you got to see no overhead resistance. That's number 1. Number 2, you got to have RSI have the ability to make that next leg up. And if you do see that close above 10,000, that certainly could be a trigger for Bitcoin here.
Yeah, all I heard there, I didn't hear anything except Matt saying, I'm on Team Bitcoin. That's what I heard.
I'm an analyst. I'm not on a team. I'm a
welcome to Team Bitcoin, Matt. Bitcoin 75,000, yo.
Listen, by saying you're on the team, you're discounting every other form of analysis, and that's just not how I approach the market. As a trader, you're both a bull and a bear. When the markets are bullish and have momentum, you have to be a bull. When the markets are bearish, you have to be a bear. You don't have to pick the team. You're the sniper watching the Americans fight the English during the Revolutionary War, and you just get to pick the winning side.
I just heard somebody make Matt a Team Bitcoin t-shirt. That's what I heard out.
Matt will come around to Team Bitcoin at some point. You watch.
Mark's goal is to trigger Matt as many times as he can today.
If it breaks out, Matt would be bullish on Bitcoin.
I'm not anti-Bitcoin. I'm anti-idiots.
No, listen, my goal is to always trigger Matt 0 times. See, Matt, you got to know how to poke the bear.
Anti-idiots.
You got to know how to poke the bear with Matt. Like, so you don't ever want to agitate him, but you want to playfully, just in the right way. You got to know how to poke the bear, or the bear will
can't go too far.
Yeah, you got to know how to poke it. It's an art form.
No, you got to poke the bear too far. Maybe we're not pushing these limits enough, Mark. I mean,
no. I want my brothers to be in a good mood. I want to just playfully tease with them.
He's always in a good mood. I don't know what
I am not anti-Bitcoin. I do believe some of the original arguments of why Bitcoin was the democratic currency, the anti-central bank currency. Some of those original arguments no longer exist.
Listen, I want Maria, if you're out there listening, you're oftentimes doing, I will pay for it. Send me the bill. I want a Team Cuban t-shirt for Tim, and I want a Team Bitcoin shirt for Matt. I will buy it. Just send me what the bill is. I want them black with some colorful lettering.
All right. I'm Mark Cuban team, I guess.
Timmy the Bear and Team Bitcoin.
We got a lot of t-shirts in the cookie here that we want to make. By the way, top-down analysis done here. We're going to make a transition in our show, start talking about companies. In the news, there's quite a few earnings reports out there among retailers and whatnot. A few things I do want to promote while we're in our transition. Number one is our podcast. On Tuesday morning, Matt, the podcast is usually available, usually Monday night, actually, when we post it.
It's usually posted Monday late afternoon, 5 o'clock Mountain Time, 6 o'clock Mountain Time. It doesn't go to the actual website until Tuesday morning, but you can download it on any podcasting app on Monday night.
Yep. So the podcast out there, make sure that you go check it out. Episode 373 is live. Give it a listen after the halftime report sometime today. And if you've not subscribed to the podcast yet, you can do that on any podcasting app like Matt talked about. Many companies I want to get to in the news here today. Let's start with some of these earnings reports, guys. Walmart, Home Depot, Kohl's, Matt, I know you read through quite a few of the numbers. How was your reaction to Walmart?
I took Walmart's earnings is very positive, is what I took Walmart's earnings. And, there's not a lot of companies in this space that have done as good as Walmart. It's a Dow Jones company. The Dow Jones has significantly underperformed the market recovery. Walmart has outperformed it. So, in terms of Walmart, you gapped up on the actual numbers. And let's go through the numbers really quick. Walmart came in at $1.18 a share versus the expectation of $1.10. The overall revenue, and this is what people don't understand about Walmart. They think Amazon is this juggernaut retail when Walmart's revenues are so much bigger than any other company out there, even Apple's. Walmart's revenues came in at $134.6 billion versus the expectation of $129 billion. So a beat on EPS numbers, a beat on revenue numbers. Revenue grew 8.6% year over year. Now, this is something we've seen with a lot of companies. They did withdraw their guidance for 2020 coming into 2021, citing the pandemic and the uncertainty from an economic perspective. But the number one thing I was really impressed with Walmart's earnings was their e-commerce sales. Their e-commerce sales year over year increased by 74%. And they were and I forget the company they bought to help with their e-commerce, but they just discontinued it because they are doing really good from an e-commerce perspective, same day delivery, pickups. A 74% increase in e-commerce sales was a really, really, really good number. And it bodes well for Walmart in this type of economic and, healthcare pandemic, however you want to categorize it. So I took Walmart's earnings as very positive. Now, Walmart's not a company you trade. Walmart's a company you invest in. It's one of the most boring companies in the market, but it's also one of a safer company in the market, especially in some uncertain economic data that we've been seeing. I've said this many times, but Walmart, when the end of the world happened in 2008 and the S&P got beat up by 57%, Walmart actually went up about 22% in that environment. Walmart's earnings gap here obviously gapped up and it came smack dab right into that resistance. I do believe that gave the investor class a little bit of a cause just to lock in a little profit here. And that's all I'm taking this as today.
Mm-hmm. You know, obviously the online model there with Walmart is what's helping them so much. Same day delivery, Mark. In fact, I know you shop at Walmart, but you order everything, you go pick it up, right? You do the curbside stuff.
In fact, I got a Tim, you know, you and I's a little game, and please, no one out there copy me. And if you copy me, you better please don't. But what I just did for Tim and I's game, selling a 117, I just sold a May 29, 117 put I got 17 cents for it for our little game that you and I are playing.
What expiration?
May 29th, 10 days.
Interesting.
So, I thought it was great. Like, I was concerned about Walmart. This is my working thesis on Walmart. Aside from Walmart being a juggernaut and taking over the whole world, it and Amazon, you know, the war is not going to be held between China and the United States. The great next World War III will be a land battle between Walmart and Amazon as they rile their troops to fight with each other in the year 2132. Walmart is a juggernaut, and I love the online sales numbers. I love the pickup delivery numbers. I think you are seeing some trends that people are going to get used to using Walmart online for the first time. Mm-hmm. Habits are going to be formed. Absolutely. And so, yeah,
especially once they realize how convenient it is and how easy it is. And once consumers, because not a lot of consumers in America have done that type of shopping, and we've seen it start to increase over the last 3, 4, 5 years, especially with companies like Target and Walmart and obviously Amazon. But as the consumer behavior does change, and I do believe the consumer behavior will change regardless of what, you know, vaccine or whatever the case might be, because what happens is you start to form habits, and those habits become, you know, easier than actually going there. I think this is something that could be a game changer for Walmart into the future.
What's the premium for curbside pickup? Like, let's say you do a $200 food bill. You know, you order groceries, you got $100, $200, whatever it is. How much do you actually pay extra for the curbside delivery?
I have never even checked, and it's never.
I think it's like $5, isn't it?
Is it only like $5? You know,
it's not much.
Does it scale based on how much you spend, or
I
is it
can't
just...
remember what I did because I've done it recently. I can't remember, but I remember thinking, I don't care. It is so worth it to me to not go into a COVID-19 infested store for the little bit of money, plus the time and convenience of it. Let's forget, even if it's not, and this is the thing, even after COVID-19 has long passed and we're not worrying about it anymore, I don't particularly like shopping.
Let's face it, we're not the most ambitious people. We don't like to leave our house that much in the first place. And we like things delivered to us, and we like convenience, and we like easy. And if I don't need to go into a Walmart, but I can get the food and the goods and services I need without actually going to a physical location and just having my kid pick it up or whatever the case might be, yeah, that's going to interest me as a consumer.
You know, what's interesting, Swin here is saying that there's no extra fees, Tim. I just picked up from Target yesterday, and Gladys.
I've never noticed the fee.
Yeah.
And when you asked that, I was like, is there one? I didn't know.
But another thing that's fantastic is the fact that you said, and have my kid pick it up. So you don't have to do anything. You just order it, send the child to go pick it up for you.
Listen,
isn't that why we have kids?
We need to remind kids.
I'm working on free labor right now. I'm working on free labor right now.
Exactly.
That's exactly right. You know, this online delivery obviously is going to be really, really interesting. And really through today's earnings reports, it kind of shined on who is set up for this and who was not, and who are the winners and losers right now. Walmart works through a pandemic because they have the online model, they have the delivery model, and obviously they are very broad based.
And can I just say this? With Walmart picking up e-commerce, that's a direct attack to who? Mark's sworn enemy against Walmart and Amazon.
Mm-hmm.
Amazon, I'm going to make the statement here. I made the statement earlier today as well. Amazon should buy JCPenney. They just filed Chapter 11 bankruptcy. They're worth about $50 million. Amazon has $24.5 billion in cash reserves. And if they buy JCPenney, they strip the name, they strip the brand, they wrap an Amazon warehouse around it, and you have 800 locations around the US where you could have same day delivery, pick up, same thing Walmart's doing. It would increase that competition in that capacity.
I like it from a strategic standpoint. The only question, obviously, I don't know the answer to this, is do they get hooked into bad commercial leases? Do they have to take on all the debt obligations? I'm not sure. But, that was in the news here today. Mark, Amazon buying a JCP, in my opinion, does have some common sense application to it, even if it's not about the brand JCPenney, because let's not assume they have to use the clothes in JCPenney as what they sell on Amazon. It might just be about getting the locations, the delivery. They've done this before with food stores. They've done this before with other companies.
This is what Amazon does. They are the death dealer of brick and mortar, and then they buy it up for pennies on the dollar, and they do it for distribution and processing.
Dude, when you say it like that, it's pretty sad. They probably did lead to the death of JCPenney, and now they're going to buy them and swallow them.
Lack of management and vision over 30 years led to the death of JCPenney.
Amazon had to be part of it. People going online, but you're right, though. You're right.
JCPenney just wanted to make their name really real. They're like, how can we become a penny stock as fast as we can?
Well, they're filing bankruptcy.
It's just a crappy brand. Let's call it what it is. Like it's like the Kmart, right? There are times Sears. There are times brands Sears meant something once, right? It was this stalwarts. It's Sears. It meant something. But when that brand moat starts to fade, well, it then means nothing. Like
companies like Sears and JCPenney's and thousands of other brick and mortar companies, they fell because they lacked the leadership and the vision to change in an ever-changing economic and consumer behavior environment. That's why companies fell.
Next one, Home Depot. Let's keep talking retail here, guys. Brick and mortar. Home Depot, Marky, what were the earnings on Home Depot that you saw?
Oh, what did I see on Home Depot? Let me pull up my numbers real quick. All right, so they pulled guidance, something I don't like. It makes me hesitant. Yeah, Walmart did too. So
how do you not pull guidance if you're Home Depot, though?
But not every company has.
But most companies have, but specifically Home Depot. Okay. Today, economically, we saw new housing starts have its worst drop in human history by 30% month over month. Building permits dropped 21%. And Home Depot is very important in that infrastructure space. So with the economic uncertainty, I don't understand how Home Depot, I don't understand how Home Depot doesn't withdraw guidance. Walmart, I got a little bit more of an argument with them withdrawing guidance. But Home Depot, I don't know how you could project earnings in 2021 for Home Depot.
But the number I like, and this is like, I'm not ready to invest in a Home Depot, but I would like to do a bullish trade. The number I like, and sentiment, price target, the sentiment is just fine. The analyst, the numbers, same store sales were up 6.4% above that. All of the sentiment that's been behind Home Depot for the last 6-7 weeks, it's all there. It's still extremely strong. Tech and Home Depot. So give me a technical setup coming up. Maybe give me a little pullback, give me a consolidation pattern, give me something on a technical pattern where I'm like, oh, that's really pretty. Because the sentiment, rock solid still. Earnings, even with a slight miss on EPS, nothing. People are still jacking their targets up.
Yeah, the miss on EPS numbers wasn't bad. It came in at $2.08 a share versus the expectation of $2.22. They actually beat slightly on revenue at $28.3 billion versus the 27.2 expectation. Revenue grew very similar to Walmart at 7.1% year over year. I didn't take their earnings report as bad. I know it's down 2.7% on the day, but the reality is it's still above the 90 EMA and it's still above all moving averages.
Do you think the increasing cost, Mark, are temporary?
No. Well, it depends, right? It's a virus. Yeah. It's like any question with the virus. Is the virus no longer with us 6 months, 12 months from now? Then, of course, they're temporary. That's a virus question. So, that would make me saying, yes, I know exactly how it's going to play out. So,
I think sanitation is going to be important for consumers moving forward. I do. Even after we get a vaccine, I think that starts to stay. I'll tell you right now, come out with a vaccine, I'm still going to wash my hands more. That has taught me such a valuable lesson of germs and washing your hands and not, doing all that stuff. We saw the numbers out of Walmart. I didn't see the numbers out of Home Depot, but Walmart had $900 million in increased costs for sanitation in the quarter. It's a big number.
Yeah, this whole thing feels a little bit like one of those pre-COVID, post-COVID kind of worlds where the world, I don't think, is going to ever get back completely to the way it was before because we're all going to see things differently. That's just my
Maybe
perception on
that's
it.
not a bad thing if we're all a little bit cleaner in the future.
Yeah. Yeah, no, I'm with you. I'm with you. Kohl's next, then Advanced Auto Parts, if we can. KSS. We're talking about an Amazon who already does partner with Kohl's here in terms of shipping, delivery, and all that kind of return. Matt, what did you see in Kohl's earnings?
Kohl's earnings came in. Let me get you the numbers first. So where did I write those numbers down?
By the way, has not participated in a recovery at all here off the bottom. Kohl's,
nor should a retail store.
Yeah,
Nor should it.
stayed stuck
They
on the
came in.
bottom.
They came in. Their earnings numbers are actually fairly disastrous in my opinion. They came in at $3, a loss of $3.20 a share versus the expectation of a loss of $1.79. Revenue also came in under the expectation at 2.4 billion versus the expectation of 2.6 billion. Revenue just got absolutely, and this is why I said Kohl's should not be participating in the market recovery. Revenue fell 40% year over year. And also, and this is a kicker for me, they refused to provide comparable same store figures, citing closures. And so they didn't even give us the real kind of the nasty numbers of same store sales. So I took it as a fairly negative report, and I don't see any reason for anybody to look at Kohl's from an investment perspective until we're post-pandemic.
Yeah.
Now, see, I'll play Kohl's off the bottom if I can sell
Sell a $10 naked put, and that's fine. I'm talking about actually investing.
Well, that's investing if I get put. Listen, the
Well,
one number that mattered to me, because it's the only matter that matters to the market, on these beat up companies, they care about one thing: how much cash do you have available? They reported that they had ended the quarter with $2 billion in reserves, so they got time to weather this storm.
they do.
And so that's why when I'm identifying a company that's obviously in a world of hurt, how much cash and liquidity do they have? And Kohl's has a chunk. And so once again, I'm not chasing any of this stuff. If I can get a good deal at the bottoms.
I think Kohl's could be a good buy at some point. And I agree with your thesis there on the $2 billion in cash reserves that allows them to withstand any short-term volatility or short-term economic risk. You know, maybe we see on a weekly chart, we see a double bottom down there around $10 again. Maybe at that point it's a pickup, you know, or perhaps a breakout of $20, So I could see it, but I just feel like, you know, a 40% decline in year-over-year revenue is a big deal.
See, but here's the thing.
I need to see those numbers improve next quarter before I'm like, hey, Kohl's is a buy.
And this is how I'm tactically playing, though. Let's say I get put at $10 and, well, everything sucks. Well, the team will come up with some random new virus vaccine or random nonsensical thing, and they'll prop up and jack up everything 10, 12, 13% on a day like you did yesterday, and I'll be able to clear out of my trade at a profit. I mean, that's how I'm tactically approaching it, that these type of events, even if I'm putting the stock, will come clearing me out, allowing me to make a profit because the team is powerful.
There are just 1,000 other things I'd rather do than own Kohl's, though. I just can't imagine a stock less attractive to me in that regard. I mean, it's just a boring retail stock. You know, I understand that it had some resilience, the $2 billion in cash. That's good for that type of company. And we are going to see companies fail and go bankrupt through this. There's no doubt.
Now a company I like even better, and I believe they have their earnings tomorrow, is TGX. TGX.
Max. Ross Stores has earnings later on Wednesday as well.
So.
My wife went shopping this weekend, so TJ Maxx is going to do fine on earnings.
TGX.
So your wife is supporting TJ Maxx like my wife supports Disney.
Every married trader I've ever met who's a man always wants to trade the company that their wife spends money at to try to make the money back. Every single trader.
Absolutely true. Absolutely true.
It's just what it is. I mean, it's emotional attachment to it. Advanced Auto Parts here next.
Cash flow off it is what I do, though. Like let them pay me passively.
Mm-hmm. And I don't know if you guys got numbers on AAP. I don't really care about the numbers. What I did find very interesting is the commentary out of the CEO. They had earnings this morning or last night. Basically, he said sales week by week by week, the last 4 weeks in a row to start the quarter, were improving. And he saw some positivity out of just their retail locations as the lockdown starts to slow down a little bit. People are going back out and driving. Matt, did you get a chance to look at AAP? I'm not sure if it's one you did.
I sometimes have a hard time trusting the words that come out of CEOs' mouths, especially when they missed on EPS numbers, they missed on revenue. I mean, it wasn't just a small miss. They came in at 91 cents per share versus the expectation of $1.73. That is a massive miss on the EPS numbers. So they can tell me all they want that, oh yeah, CEO says this. The CEO has an incentive to inflate their stock price. Not every CEO.
The funny thing about Advanced Auto Parts, and it's a funny stock because it is a traditional recessionary play. The one thing that you see about Advanced Auto Parts is that, and this is the thesis, and it's been going on for forever. I mean, literally as long as I've been trading, is that when there's recessionary environment and people don't have as much money, they will fix their own car instead of buying a new one. They'll do this type. I mean, and that has been a general thesis that goes back as long as 15 years, as long as I've been doing this. And so it has some anti-recessionary sentiment that is a long-standing. It's like sell and make, go away. It's one of these things that people just, believe in. So it does have some counter-recessionary sentiment that's in it. I don't know how to play it. I can't wrap because I don't know. I don't really feel great about owning it long-term. The numbers, as Matt said, suck. But that's how the market views it. Do with it as you will.
I agree with that. I agree with that. In times of uncertainty, people are going to fix their old car instead of buying a new car, right? And outside the 1 month in 2008, in September and October in 2008, where I mean everything was just selling. I mean everything was almost except Walmart. But outside that, it recovered fairly quickly. It recovered faster than the market. It maintained, that 200-day moving average when the market was selling even before that. And then it had a great run after that as well. So I certainly do agree with what you just said, Mark.
Well, and even can you extend that logic a little bit? People aren't flying as much. They're going to be taking summer vacations out on the road. O'Reilly Auto Parts are just interesting to me in this whole play because of what you said, Mark. And I also believe consumer behavior. People are still going to drive, right? They're going to be driving places instead of flying places.
This market is so insane, right? It's like, well, we're going to V-shape, but we're going to jack up Advanced Auto Parts because it's recessionary. You think about the logic yesterday. The Fed's going to do whatever it takes to stimulate this economy, because we could be in this thing. But then there's going to be a vaccine, which would not necessitate the need for the Fed to step in. And we're going to jack that up too. I mean, the bulls just have their cake and eat it too on everything.
Also think about it like this, guys, on Advanced Auto Parts and other companies like this. Most Americans are upside down in their car loans. And so if you go get a new car, you have to roll that debt into the next car. I just don't think Americans are going to be doing that if the economic data doesn't improve dramatically.
Good
well,
point.
The credit's also going to be a lot different. I mean, seriously, go out and if you have, perfect credit, all of that, you can get a loan just like you could any other time.
Yeah.
Go if you have bad credit out there, go see how easy it is to get a home loan, or go see how easy it is to get a car loan. It is a much, much, much tougher environment than it was. And that's a real issue moving forward. But of course that doesn't matter because that's a one-day thing, right? So
Disney next, if we can. They're losing some talent to TikTok. I didn't know the guy, obviously I don't track every executive at Disney, but he was kind of given credit for doing the Disney streaming launch, Disney Plus, right? I believe in the fall. And so, notable when you're losing somebody.
As well, their movies and whatnot as well. His name is Kevin Meyer, and he left Disney to become the CEO of TikTok, which led to Disney getting downgraded here today at one of the financial firms.
I'm not saying that's a bad move. I don't know what TikTok is going to pay him versus what Disney is going to pay him.
I promise you TikTok's going to pay him a lot.
Yeah, but TikTok is obviously on the rise. I mean, huge social media app. There's not a meeting that goes by that Gino doesn't tell us how much his daughter's on TikTok. So I know that the kids out there are using it like crazy.
2 billion up.
Isn't it the most downloaded app like right now? Something like
Yeah,
that. Something crazy.
2 billion downloads.
Yep. Southwest Airlines, Matt, they actually had some pretty positive news about bookings versus cancellations, showing some demand that the consumer is coming back, at least anecdotally and slightly. How did you interpret that news?
Well, what Southwest said is they're seeing demand in June increase over cancellations in May. And that I took the news as positive for the airlines in the short term. I still think it's going to take the airlines quite a bit of time to actually get back to profitability. But it wasn't just Southwest that was talking about that. Delta came out also, and they stated that they're going to they're seeing an increase in demand in June as well. They're looking to do 50% capacity in the first class and 60% capacity in their cabin, which means there's no middle seats. And if you're in first class, you're sitting by yourself, which as a former traveler who flew about 900,000 miles in the last 6 years, if I was flying, I would really enjoy just sitting by myself in first class. But also Delta said that they're hopeful to be cash flow positive by the end of the year, which would be quite amazing for Delta.
Yeah, I mean the reopening theme, obviously, and whether consumer comes back, it's going to affect the airlines maybe directly as much as any industry out there. There's no question about it. Mark, do you have any interest in the airlines down here? I know that usually beat up areas, distressed industries are usually of your interest as a counter trend trader. Any interest in the airlines?
Yeah, if I can get them extremely
You want
cheap.
another leg down. So like on Southwest, you wanted it like $10.
Yeah, I mean, Southwest is probably my favorite of the airlines from a fundamental standpoint. One, they have more cash available. Once again, liquidity is king in this environment. But two, I mean, what do you see coming back first, domestic travel or international travel? I think it's a pretty easy call. I mean, in fact, Norway yesterday said, hey, if you're not coming here from work, stay where you're at because we're going to send you back. So international travel is going to be the last leg to come back if and when is going to probably, right, in a long enough timeline it will. What level, I don't know. But domestic travel likely to be first. And so like companies that are positioned with cash, and it's just, I mean, there's risk with the airlines, right? Especially if you were to change
some real good evidence on these airlines though.
Mm-hmm.
So, but Southwest is probably the best in breed of the U.S. majors. So,
It's an interesting point.
United and Delta have a lot more international fares than Southwest, obviously.
Mm-hmm. By the way, somebody who travels quite a bit, this is my least favorite airline, just from a personal preference perspective.
Don't say that. There's Southwest lovers.
Dude, I know. Listen, this is very polarizing.
You like Southwest?
Because they won't give me a damn seat.
Because he doesn't get first class, and it's the same reason I like flying Delta. It's because I get to go on first. I get to get my hot towel. I get to get my cup of whatever, and I get to just enjoy first class. And yeah, so I'm with you, Tim, on that. But there is plenty of people who love Southwest.
It's one of the top 10 brands in America, I think, on a regular basis for many different reasons. People who are loyal to Southwest, they love them the whole way. There's no doubt about it.
I don't like feeling like I'm herded like cattle onto the plane. I don't like that.
Once again, more evidence that while Tim might be the youngest of the three of us, he is the oldest, grumpiest man of the three of us. I don't get my way. I just don't like Southwest.
Not about my way. I just want a seat in advance. I want to know where I'm sitting.
Sarah, I am definitely a card member carrying of Team Delta. There's no doubt about that.
Yeah, there's no doubt. All right, more companies I want to talk about here. Moderna next, if we can here, Matt. What's interesting about the stock, we talked about it. This really is what propelled the market yesterday with the vaccine news and all that kind of stuff coming out over the weekend. Just mRNA, flip those two letters in the middle. And but yet yesterday, right at the bell, they came out and they announced that they were selling a big chunk of stock. Matt, explain what happened here, because I find it fascinating.
I find it a little bit fascinating myself, to be perfectly honest with you. They come out yesterday with the news that, was it phase 2 or phase 1 trials? I think it was
Their
phase
phase
one.
one. Their phase one was successful. They're moving on to phase two.
And phase two is in June, July-ish, correct? And
Yes.
and you know, the news came out. It was obviously positive news. I mean, they tested, I think it was like 43 individuals, and after the second dosage of the vaccine, they started showing antibodies in those individuals that was very similar to people that had recovered from COVID-19. And so obviously some positive news, and then phase two trials, phase three trials later on this year. And, you know, hopefully if everything goes great, maybe a vaccine by sometime early next year. Now, obviously, those are projections and so on and so forth. The stock price just skyrocketed on the news, obviously. And then they announced they're issuing a new stock, like 17.5 million shares at $1.76. And it just was interesting to me, and maybe a little, I've seen this happen a little bit, maybe a little cash grab by some of the executives there issuing new shares. I think it was like $1.34 billion in new shares issued, trying to take advantage of the momentum that Moderna has had recently.
So let me get this right. So they knew that they were going to have a share offering that night, and coincidentally, they go on CNBC and announce the results of the vaccine trial that morning.
The timing is very curious there, Mark.
Okay,
I love it. I mean, if you're a shareholder, I mean, bump the stock up and then sell at the top.
I get the skepticism there, Mark. I do. I really understand
and
it.
let me
Obviously.
add something that you guys don't know, most likely, that I
Same
found
day
out
though.
in my research.
Same day.
And
How are you not slightly skeptical?
And if this vaccine is so encouraging, why has the CEO been actively sharing sells recently?
Selling his shares.
Selling his shares recently. This all smells.
It smells.
It all smells.
It does. It looks corrupt. It looks like it was a pump and dump.
Looks
I
like
get that. But I will applaud a company, you know, give them a little golf clap for somebody who's actually selling their shares at a high point instead of a low point, because they got, you know, they need the cash. Many companies during the run up, guys, they were buying back shares up.
You don't have any concern that they plan to release the phase one trials on the same date that they were going to issue new shares while the CEO is selling his shares. You have no problem with that.
No, I do. It stinks. It smells bad.
Can we take the golf clap away?
Because at least, dude, it really drives me crazy when companies at a high point who don't have the cash to do it are buying back stock at their high. I mean,
how do you know they don't have the cash?
Well, they don't need to.
You're making an assumption there.
Shouldn't they be selling shares when they're at a high point?
If the CEO is buying shares at the high point, I might agree with you. But when you release a phase one trial result that drives the entire market up 3.5% and Moderna up about 30%, and then you issue $1.34 billion in new shares at $1.76 while the CEO is selling those shares, yeah, that
smells fishy.
Yeah.
You don't have to be a crack detective to connect the dots here, obviously. I mean, there's some manipulation going on with that. I don't know if it's illegal or not. Somebody said it sounds illegal somehow. I'm not sure. I mean,
I'm not saying it's illegal. It's corrupt is what it is. It's the timing is
same thing as Elon saying Tesla's going to this price and then watching the bump. It's the same thing as anyone who makes a large announcement, stock jumps and then they sell. It is corrupt. It's
strange story.
It doesn't rise to the level of insider trading. It doesn't rise to that level. But
fishy.
It stinks. It stinks.
Mark, you've got some hair on the back of your neck rising up, wondering whether or not this trial is actually. I kind of picked up on your skepticism there through your comment. Do you think maybe there's something that they know that we don't, that the positivity, rip was overdone?
I mean, this is the thing. And I mean, once again, I'm tactically playing this. This is why I do the things I do, because I know these announcements of vaccines and therapeutic treatments. I mean, and once again, I hope it does, because once again, I want to go to the bars. I want to go to the movie theaters. I want to do
karaoke so bad.
I do. I want to get back, as we all do, to our lives. But I mean, just call me a skeptic. It's not a peer-reviewed study. It's a very limited study.
Only
it's a phase one study. And so, yes, we'll take any gleam of hope, right? And then there's the whole question. I mean, we'll take any gleam of hope. But
of course, we all want a vaccine. Nobody's saying, and I hope Moderna comes out with a vaccine, or Pfizer, or Biogen, or Amgen, or any one of the pharmaceutical companies.
Any of the gens.
Any of the gens. I hope that happens, right?
But I want to know the bag holder.
Issuing shares on the same day you issue a phase 1 trial result, which, like Mark said, was not peer reviewed and was a very limited study, that does lead to some degree of skepticism.
And all I know is I want to know the bag holder who's still holding that bought at $87.
Dude,
right?
Yeah.
So somebody was like, oh, you know.
Forget that gap fill. Look at SRNE. This was the other company on the look at the bag holder here, Mark. Did SRNE flip the N and the R? So Sorrento here, they also came out with some positive trial results and whatnot. Mark, somebody bought at 10. It's now at 5 on this gap fill.
Yeah, no, I mean, it's but once again, I mean, there's all kinds of different traders and investors. Yes, I'm an old stodgy one that sometimes likes to do a trade on a CRM, that likes to chase momentum. You know, I'll trade, right? But then you have individuals that are trying to hit a home run at all times, and they're just naive. I mean, they're just, you know, they are just careless. I mean, there's so many examples of this. Go to Blue Apron. I believe it's AB.
Why is anybody trading a micro pink slip penny stock here?
Because they're trying to hit a home run.
Yeah, they want to hit those Wall Street bets.
I get it, but it's insane.
I bought Sorrento when it was at $8, and now it's at $97,000.
And now they, yeah, but then it goes back down to 2, and they're like, well, I was doing it from an investment perspective, but no, I was doing it from a trading perspective. But now, I really do believe in the company when they don't even have any clue where this company is even being ran out of.
I mean, I pull up Blue Apron, APRN. I mean, you see this all the time in these little small micro cap companies, where there will be this momentum that gets chased in the short term because greed takes over.
It does.
And you have these few days, and then once again, in the end, fundamentals always matter. They always do.
It's like Apple's not going to go up 200% in 4 days, right? But give me Apple, Microsoft, Amazon, Netflix. Give me any of those companies over any of those pharmaceutical ones.
Mm-hmm. Yeah, I'm with you. 2 more during this segment, then we'll move on. Uber, they're cutting jobs. It's a reflection to me. They got to cut costs, and they know it. They can't just bet on everything like their business plan has been for some time. Cutting jobs after that post-earnings move here. Just
jobs is bullish, though.
Yeah, I understand from a cost perspective, but it also tells me their financials aren't as good as people might assume. And we know how bad they are, actually. A debt-driven company loses tons of money. So just making a point. Another one here, I did want to take a peek at Target, just a little earnings prep tonight. Do you guys expect similar kind of stuff out of Target? I mean, we've been talking retail earnings, all of this. What are you looking for in Target here, guys?
I'm looking for it. Again, I'm just looking for it in comparison to Walmart is what I'm looking for. And obviously we'll analyze it tomorrow.
Mm-hmm. Mm-hmm. Yeah. And then last one here, Zoom. They're holding a virtual trial in Texas. Not that Zoom.
Oh, yeah. I just wanted to bring it up to see if it was skyrocketing again.
Dude, that's a nice little pullback. It's back to 10.
They halted trading on it, I thought.
I think they did.
Look at that 60 tick on Zoom there, buddy.
No, Matt, they halted trading on it back in March. they stopped.
In hindsight.
Thank goodness, because Main Street can't get that one right.
In hindsight, you should have always bought Zoom, the fake Zoom, at low levels, knowing that I mean, like in hindsight,
Main Street would have done it.
Like that's one of those that I look back on. It's like
the percentage of the order fills that come from those app-based brokers in ZOOM.
Mm-hmm. It's crazy.
Yeah.
The whole move. I mean, that's one of the craziest things we've ever seen, quite frankly. I just think it's so funny, that whole story. But Zoom is actually holding an all-trial Zoom conference video in Texas, Matt.
Insurance claim or something along those lines. I can't remember what the trial was, but fascinating.
Why can't we do more of this in the future? Why do we have to have these formal events and all that kind of stuff? I mean, it just is, to me, it's like we've got this online thing. It might not just be Zoom. It could be teleconference by a bunch of companies, but Zoom has taken the lead. I expect some social institutions to change, like a city council meeting. Why can't they do it on Zoom? Why do they got to go back down to the town hall and bang the gavel? What is it? Just tradition?
As an individual who runs an online company and utilizes Zoom, I'm not going to disagree with you in any capacity here. We love Zoom, but what's fascinating is Zoom now has a higher market cap than every airline in America.
I read that as well. I thought that's so.
No, Matt.
Incredible
No,
statement.
I believe
combined.
They have combined if you took all of the majors, Zoom has a bigger market cap.
What's crazier? Tesla having a higher combined market cap than Ford, GM, and the traditional car companies, or Zoom having a higher market cap than all the airlines?
Mm-hmm.
Zoom's an online hosting platform.
Listen, here's the thing.
If they don't have any physical infrastructure at all.
If you ever wondered, and if you ever dreamed of what it was like to trade in 1999 and 2000 during the dot-com bubble, you're getting a taste of that these days. The same type of sentiment, the same type valuation doesn't matter, the same type of, hey, it's all about the future. This mentality is as high as it's ever been. It is very sentiment mentality, argument wise, like it was in the dot-com bubble. Just saying.
Yeah, no, there's no doubt about it. And guys, we're
P ratio.
It's got to be, is it even positive? Have they made enough money over enough quarters to make it positive?
His voice just sounds of disgust. What is their PE ratio?
It's 1,816.
1816.
But Matt, it's all about the future.
I get it. In 1,816 years from now, you'll show a profit on EPS numbers.
Mm-hmm.
But Matt, it's all about the future. But that's the mentality, and this mentality has been really strong for a couple years now. And it is getting to these, I hate using the phrase, this irrational exuberance type level where nothing matters. Fundamentals don't matter, and earnings don't matter, and all of this don't matter. And it's all about the future. I mean, this is the mentality that existed in the dot-com bubble. Now, we all know how high that can push stocks, which is why I'll be momentum trading when I have a nice setup on CRM, when I have a nice setup on Facebook, when I have a nice setup on whatever it is. I'm gonna trade those, right? Because trading doesn't
trade them.
Trading,
but you are foolish to invest in a company at a 1,860 valuation from a PE ratio.
Yeah, I need that to be down around 800 for my comfortable.
I need that to be down to like 40.
Not gonna happen. It is not going to happen. Although their subscriber numbers are very impressive. The growth here.
Why is it, in your guys' opinion, that Zoom, because Nono makes a great comment, Cisco WebEx, Microsoft Teams, Google Groups, and so on and so forth. I'm sure Facebook will be looking into this as well as other tech companies. Why do you think it is that Zoom has become that market darling from an online perspective? Adobe Connect, BlackRock, you name it. Why Zoom above all those other companies of online hosting?
Well, think about one of the original.
Simple brand name. Fantastic, simple brand name. You Zoom, just for you to say Microsoft Works or BlackRock, like it takes heart. Zoom, simple name, great branding, and you know what it is.
TiVo was a simple brand name, and the company failed. So I'm with you. I don't think it's a bad thing that they're called Zoom. Zoom is a really good marketing.
It's also very easy to use, and it's a cheap product for small businesses and consumers to use as well.
You can Zoom for free, number one. You can Zoom paid as well. You don't have to have elaborate integrations. I'll tell you the thing with, like, even if you missed one, even Google, Matt. You remember the old Google, what was it, Share or whatever it has? They had video before anybody had video. Nobody used it. It's like, we don't always.
So simple, though. I mean, that's the thing that I love about Zoom. It is such a simple product to use, and it's a very cheap, inexpensive product for small businesses and consumers to use.
I mean, and it's a great product, but I think Cody, like the brand names, JCPenney, that brand name sucks. Zoom, I mean, just let's Zoom. Like it just has this really cool feel. Now, once again, once again, like
That's become a self-fulfilling prophecy, though. It's because people integrated and used it. I mean,
Well, it's the same thing as Google it. You push that. You push it to where you say, "Hey, let's get on Zoom. Hey, Zoom chat me."
Zoom is becoming
say,
a verb.
"Hey, let's do Microsoft whatever."
Teams.
Zoom is becoming a verb.
Yes, exactly. Same thing as Google it. Zoom meeting.
It's becoming a verb.
Yeah.
I get that. But once
they
again,
did a fantastic branding is what they did.
Profitability when you're dealing with cheap, inexpensive, if not free services.
They also came out after all these other companies were trying their stuff and failing. Because when you think of Google, you don't think of video. When you think of Microsoft, you don't think of video. Zoom, after all the dust settled, they said, we're just going to make a video chat company, and that's all we're going to do. And they made it simple. They had a good name. They hit the tiers of branding and marketing that are needed to get your name out there.
I think that's a good point.
Let me give you, and once again, and demographics matter. I mean, let's go to the world of online dating. Facebook dating is 100% free. You can take all of their features. You can use all of the integrations. You don't have to pay a thing. You can do online dating with Facebook dating absolutely free, not a cent out of your pocket, and still get the entire experience. What do you think 20-year-olds and 30-year-olds are using, though? Are they using Facebook dating?
Not Facebook.
No. Tinder, sometimes Bumble, but mostly Tinder. It's about branding. It's about demographics. It's about what's cool. So you can have free product services, and it can do nothing to stop the growth of a brand name cool product.
You know,
like
that's a really, really good point as well. And I'm with you, but this earnings report coming up, guys, because that 1800P ratio is based on March earnings, pre-lockdown, pre-pandemic, and pre-subscriber growth. This next earnings will be very, very interesting for Zoom. And I think another one of the best moves Zoom made through the whole thing is giving this to schools. Okay. Yeah. Because now how many kids all
demographics,
have a Zoom account? My daughters have Zoom accounts.
Fantastic marketing.
It's brilliant. And that's an excellent
point. Get it in the brain. It's set in your mind now that this is the video chat service.
No, yeah. I mean, I'm interested in Zoom. Once again, I don't chase. Like, I got to get such a.
I love trading Zoom, but I have zero interest in investing in Zoom at these levels. I had a lot of interest in investing in Zoom at $60.
I think it's a trading candidate. Yeah,
it's a trading now.
For me. Yeah,
you got to buy a breakout, by the way, guys.
Oh, absolutely.
Time consolidation break.
Oh, if you don't think it can have a PE ratio of 2,700, you haven't traded long enough to know how momentum works.
Can. All right, guys, let's make our last transition here and do a quick coach's corner.
Hey, real quick, Tim, just real quick, car registration in China failed for Tesla by 64%.
Tesla car registration was down, so people aren't following through on their deliveries. Is Tesla up today? I'm sure it is. Because negative news can't derail that company.
Because negative news does not matter.
It's up
0.5%. Interesting consolidation there, by the way. It is. I mean, just from a chart perspective. Real last thing here, guys.
That's a breakout candidate there as well.
You could play a breakout for sure as a trader. Last thing, one quick thing. If you are watching our show for the first time, give me a thumbs up, a share, a subscribe, click the bell, all that kind of stuff. If you're out there and you are a part of our pro community, we always appreciate you. We love everything we do at Tackle Trading. We have a lot of fun here, obviously, and this halftime report is a central part of Mark and mine and Matt's day, on a regular basis as we come in and do the show. So just type in pro member. If you are a pro member, we do appreciate you and represent hashtag Team Tackle. Couple things during our coach's corner, we always have a couple of different ideas, things we're looking at, things we're interested in. Matt, you also were going to promote that 7-step guide right there. Kind of explain how people can get to that location on the site and what it is.
There's been a lot of interest just across the board, maybe it's some of this, market, got jackknifed and it's a buying opportunity, or, I'm home and I need something to do, or whatever the case. But there's been a tremendous amount of more interest across the board of Americans looking to learn more about investing and trading and protecting. If you're new to the market, what I would suggest is you start with this 7-step guide to trading. It's a free product. And, like I said before on this thing, it's got 2 hours of videos walking you through the top-down approach to the market, going through a systematic approach to your daily routine, finding trades, prepping trades, placing trades, journaling trades, from step 1 to step 7. And I hope you truly do enjoy that. So that's where I would personally start. And then if you want to become a monthly pro member, you can get there by now. And then obviously we have our systems like the Bear Market Survival Guide, Futures 101, System 101, Technical Analysis 101, Trading Journals. But all of those come free with the pro membership as well. You can get there by going to tackletrading.com, hit the store button, and then you can see kind of what our pro members have access to.
Absolutely love it. All right, a couple picks here. I'll go first in the coach's corner here, guys. There's a few on my watch list as I go through every day and kind of update it. Number one, we've been talking about gaming. I missed the breakout on Take Two. I don't know if you guys caught that or saw it, but EA is still setting up very nice. And part of the reason we missed the breakout here on Take Two is it was pre-earnings, but EA is not. Post-earnings here, still watching that breakout up at 120.
On EA above that 120 there, team.
That's clean, isn't it? Just clean. Wayfair, W.
Above 76 as well.
All those gaming stocks have been hot. There's no doubt about it. Wayfair, I'm watching this deep pullback. It's not a trigger. You had a big red candle yesterday. It's kind of like that anti-reopening thing. They all got away from it. Isn't Wayfair? Yeah.
Wayfair's a pandemic stock.
And isn't it on your team, Mark? Is definitely part of team reopen. The economy's got to go up. Everything. Wayfair, online retail, online shopping. That's a nice pullback. I like it. Not there yet. 175-ish, Matt.
I have zero interest.
I don't. Mark doesn't like stocks that are high. Mark likes stocks that are low. But from a trading perspective, dropping this down into a little bit of an intraday perspective, you see this retracement start to form right here. You got a very consistent trend. If you played it aggressively, I think you could play it above the high of today. But I think that 175 level is kind of the level if you're looking for confirmation on a bullish retracement. And that's what this is. This is a bullish retracement in between the rising 20 and the 9 EMA. But you'd have to give me something above 175 here.
Mark, if you're going to truly be on the team, you got to start playing momentum trades.
You can't just CRM when you don't trade the way the team's trading.
I like this is where I like momentum trades with Home Depot. I like momentum trades with your big tech names, your CRMs, your Facebooks, your Amazons, your Shopifys. Like the things that I know the market absolutely loves. Wayfair is, I don't have all the sentiment.
I get it, but your momentum trade is like one day and you get a little nervous that it's going to come back.
2 days, right?
No. And I find it very difficult to justify your leader of this team status when you're always looking for markets to crash.
First of all, I've never said I'm the leader. I'm just a happy participant. Like the CRM poll, like the CRM. You give me a beautiful setup like CRM had this week where you pulled back old resistance, you tested off new support, you then cleared. Loved the setup. Absolutely loved. You had a classic 1, 2, 3 down, old resistance, new support, bounce, clear the intraday highs. Yeah, if I can get beautiful setups in the real leaders of this market, I'll trade that momentum every week from now to the end of time. But I just don't have Wayfair as one of those in that group for me. That's all.
Yeah, but it's one of those where you can break out the fancy strategies
on the team, by the way.
Yeah, I think you can do some fancy stuff like vertical spreads, ratioed spreads, butterflies out of the money. If Wayfair runs, it is one of those home run hitters.
I got it as a bull call above 175.
Yeah, it's a home run hitter, but obviously high risk as well. LYB, if you can, a couple of quick more, Matt, if you can. I'm just interested in that little reversal breakout. If you can clear 60, there's some clear air there coming off of the bottom.
That looks like the market.
It feels like it, but there's also more air up if you get the breakout. Clean target, good reward to risk probably. Amazon looks to be breaking out. A good call there, Jeremy. I had it on my list as well. And it's kind of a tricky little intraday, where would you play it? How would you play it? And this one is obviously at elevated levels. Who was the investor you said that even dumped their Amazon, Matt? I found that really
David Tepper, Stanley Druckenmiller called this the worst risk to reward market he has ever seen. David Tepper thinks Amazon is fully valued at its current price. And so he was getting out of, I believe David Tepper was getting out of Amazon, Facebook, and Google. I do believe he added some other tech stocks like Microsoft, Netflix, and Twitter, however.
Mm-hmm. 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 Last one on the bull side, BWA. If you can take a quick peek at that one as well. And just there's some reversals in some of these areas. On the bear team, I'm still looking at knock personally. I don't know how or where to trigger. It's kind of getting messy though, but my firm opinion is industrials and big.
That's fine. You better stop looking at knock because there's no clean trigger and there's no clean stop loss.
Big ticket production items are going to be under pressure, in my opinion. I think the area of the market that I believe is probably most prone to weakness is industrials. I'm trying to identify other areas, but I'm still.
It's going to be hard to map out proper reward to risk ratio on knock, though.
This is why it's hard being a bear. 4 weeks ago, Timmy's bearish on everything, and now he's bearish on industry. He's trying to find something because Tim, you need to stop using your brain, stop using logic.
Well, then I just need to buy Wayfair.
You know, stop using that.
I try.
Democratic problem. He has a branding problem. First of all, Tim is primarily a bullish guy.
Over the course of my life, I'm a bull. Yeah, and I'm still long on several things.
Still long right now.
I know you need to go back and just stop using your brain. You know.
No.
Listen, Mark. Just because you don't like bearish setups, I do want to remind you: if any rich trader you've ever met, any rich hedge fund manager you've ever met, any famous trading story you ever met, they all made their initial wealth in bear markets.
But bears are wrong.
I will.
So if you want to make fun of bears, wait for a 60% drop in price and cry all day when you didn't make anything.
And I've been making this plan for this point for 7-8 days now. If one of two catalysts happens, I'm happy to put a bearish trade on, even though it goes against my nature. One, there's actual real fear about a second wave, or two, there's something actually happens between China and the United States where somebody makes a first move. One thing we didn't talk about today is
or the Fed pulls funding.
Oh,
or the government doesn't come out with more stimulus.
But yeah, something. But yeah, sure. Something actually.
There's a lot of variables.
Something
or the economy doesn't V-shape recover, or initial claims doesn't get better, or the labor market doesn't improve, or growth doesn't come back in by the end.
But that's all one-day stuff. That's not going to spook bulls. That's not going to get them off. You're going to have too many setups because that was a beautiful technical setup on a knock, only to have this insane rally occur because it is tough being a bear right now. It is just really, really tough.
This chart is so choppy. I wouldn't look to short knock.
But it was clean 3 days ago.
I'll give you a better one if you just want a clean chart. Vulcan Materials, VMC, same sector, much cleaner in terms of an entry and prep.
Cleaner.
Yep.
Much cleaner. You're kissing off old support, lowering moving averages, give you a close underneath. I would say a close underneath. Right there at 100, a close underneath, say 99.25, maybe 99. Yeah, that's a much better setup in my opinion.
You're actually pushing against the 9 weekly as well as resistance on that chart, which would be a really big bearish thing. You got nothing holding it up on monthly charts. That's a clean pattern. That's a clean pattern.
And I got a bunch, but just one more. I'm still looking at the banks. You can either pick either JP Morgan or Wells Fargo, Matt. I still believe there's downside in financials. I think they've got a ton of pressure. Guys, those new housing starts numbers today is an indicator.
I like Wells Fargo better.
Just from a technical perspective, but these banks that are dependent on borrowing, Mark, there's no money in the interest, and they're going to be making less loans. You're also going to have defaults.
I want to buy banks, I do, but I am being extremely, extremely cautious. Like if the market gets wind of what is coming, I don't know how there's any way around it. It's just how you want to play it. There is going to be a commercial real estate freaking potential apocalypse. You know why I know that? Because the Fed in the report they issued after Friday's market close, do you think out of all the times that they could have released that?
They always release bad data Friday night.
Like 4:10 Eastern on Friday. That once isn't a coincidence. Like this report sucks. We're going to release
data
market
comes in 60 minutes on Sunday night so they can pump the futures market.
Exactly. Correct. So, but that report, you can tell the Fed is terrified. They said the commercial real estate market was over leveraged coming in to this crisis. Into this crisis, commercial real estate was over leveraged. You have a potential 2008, 2009 scenario with commercial real estate, and that's not good. I mean, and if the market gets spooked, like, oh, there's a real estate, that's something that can have some legs down, and banks would get really hit hard. So I'm being patient on banks.
With the building permits, with the housing data we got from new home starts, banks, if that doesn't recover in the short term, banks should be very concerned because they are not making money with low interest rates right now.
No, and so, like, I believe banks are at the front of the line for the Fed. I don't believe you're going to have.
I think you wait until the Fed bails out the banks.
I don't think you're going to have a Lehman Brothers, which means I'm willing to buy at some depreciated levels.
They are not going to allow a Lehman Brothers market.
They're not this time around.
Because first of all, everybody hated Lehman Brothers. Okay, that's number one.
Well, doesn't everybody hate Jamie Dimon? I mean, come on.
Oh, Jamie Dimon's loved.
Is he?
Jamie Dimon is very well respected in Wall Street levels. Very well respected. I can't remember. Was the guy's name Folk? I can't remember what the guy's name was.
I remember the movie, but yeah, I don't remember his name.
He was hated. He was hated. And they did not want to bail out Lehman Brothers. But once Lehman Brothers collapsed, that's when they came in with just boatloads of cash. And that's when you buy up the banks, is when they get bailed out. Because they are going to get bailed out.
And I'm willing to tactically play it beforehand, but like, that doesn't mean that there's not a lot of downward pressure from this point. Like, because once again, there could be that sentiment thing, like, oh my gosh, it's ugly right now. I mean, it is ugly right now for the banks. Low interest rate environment. They're tightening up credit. They're on the books for leveraged real estate in the commercial, the home. You're going to have foreclosures. Those numbers are going up on defaults. I mean, this is not a good situation.
Yeah, the bank's trade desk better be very good over the next 6 months.
They better be, but they couldn't offset the losses in the first quarter. And my personal, and there's a big lesson here with value investing, Matt. Low PE doesn't necessarily mean good buy. All these banks have low PE ratios, but if they have future earnings that are going down, even the P right now might be overpriced. So this is where you got to think.
There will be an opportunity in banks to come in and start a larger position. I feel very confident of that, like I did with oil, but it's probably a 3, 4, 5 month down the road play than it is today.
Oh yeah, Ilka makes a great point. Your conviction in banks on the podcast was really long standing. Mark he bought Wells Fargo for 3 minutes, Ilka.
No, it was about 2 minutes actually. I made $3.50 on the trade. I was like, Tim, because I'm interested in building a position in banks, but my conviction isn't there because I'm not getting a screaming deal. It's like when you know something's going down. It's like oil. It's like oil back when it was at 50 and you saw the avalanche that was coming. You're like, all right, I see how this is playing out, but I know today's not the day to start that position.
I get it. I'm going to tell you right now, I'd rather buy Zoom than Wells Fargo right now.
Because there's a lot of downward pressure. And so you see you see how this plays out. You see how over the course of 3, 4, 5 months, this negative storyline starts building on banks. The sentiment's already there. They hate banks right now. Banks aren't sexy. You think any?
I'll rapid fire through a couple here.
Go ahead, Matt.
Apple here testing a breakout off a nice little retracement coming back into those moving averages. And Apple is one of the darlings of the market as well. That breakout of about probably 320, if you didn't catch the retracement, that's where I'm looking. Now, when you do look left of the chart, you do have a price target most likely at 327. So your stop loss would have to be right underneath that 320, maybe 315 area. But after 327, you probably got 340 in the sights on Apple. if we do get some type of confirmation there. MasterCard has given me a little interest here as well. Yesterday, getting up above that 20-day, that 50-day, the 200-day moving average, continuation on it as well. Volume has started to pick up on MasterCard. Keep an eye on MasterCard. PayPal with a ridiculously high PE ratio as well. I don't care. This is a momentum play above 150. That is a significant whole number off a little bit of a high base. Maybe you wait for that 9 EMA to catch up to it, but I do like that trigger above 150 on PayPal as well. Skyworks, SWKS here. Nice little breakout confirmation and continuation today. Keep an eye on that company as well. General Motors caught my eye today for some reason. I was going through the scouting reports. I'm like, wow, that nice little confirmation above 25, another significant whole number with a little bit of air to go up in, and probably filling up into that gap range right around 28. So a target of 28 to 20 to 30 with a stop loss under 25. If you play that aggressively, not a stock I typically play, but I do like the technical setup there. Broadcom also looking at a little bit of looking very similar to the market. You probably needed to reclaim that 200-day moving average, and then last check on the scouting report, reclaim that 200-day moving average as well. Probably would have to trigger a momentum trade right above yesterday's high.
Lots of great setups across the market, stock pickers market. Marky, great job here today. Matt, great job as well. 15-day trial is what we come here to kind of promote as a, secondary objective after we're doing our show. Have a lot of fun. Long show today. Really, really a lot of good content though. Guys, that 15-day trial.
Patrick Trular, if you're watching, you just signed up for a 15-day trial. Welcome to our community. Appreciate you joining. We have more and more people.
That's the real team, Mark. Team.
By the way, I didn't see it, but we had a troll in the chat earlier. Cody, you got to tell me when trolls come out. I saw it. There was a troll earlier.
I got it. Don't worry about it. I'll take care of the trolls. You worry about the show.
Cody,
I'm supposed to be the producer. That's my job. I got it.
I love that.
I don't need to throw you off your guard telling you there's a troll.
They say don't feed the trolls, right?
I just
don't
comments
feed the trolls. That is what they want. They troll because they want an overreaction to it. They want you to meet their negativity and their pessimism. They want to be fed. Don't feed the trolls.
And that's why I don't bring it up. This isn't the first one. It won't be the last. I just remove them from chat, and y'all keep on going.
Well,
Cody's our virtual bouncer.
This is the thing about tackle trading, that we don't worry 1 second about negative sentiment, because we have hundreds and hundreds of pro members that will come to our defense at any given point. Trolls.
I'm going on Twitter to find some trolls just to mess with them now.
Go to Beyond Meat message board and tell them that their product sucks. I promise they will. they will attack you with.
This is a thing. There's a Beyond Meat message board.
Well, no, just say something about it.
Board for everything.
Just go on Reddit. I guarantee you'll find something on Reddit.
All right, guys. If you love what we do, if you're here watching us, you're seeing value in this. Guys, 15-day trial. We got a lot of stuff on the website, tackletrading.com. There's a link in the comments below. Come and join us. Come and find us. We'll be back tomorrow, same time, same station. We'll see you then.